Welcome back, everyone, to Rabbit Hole Stories. Today, again, with me. Ian, unfortunately, had an emergency at work, literally an emergency, so he couldn't make the call. But nevertheless, I'm super excited to have today's guest on, and that is Thomas Jeegers. Jeegers, I don't know how to pronounce your last name. He's the CFO and COO of Relai, where I also work at. So you do see I invite my coworkers to fill up episodes. But Thomas is a good dude, and I'm interested in his rabbit hole story. How has your day been so far, Thomas?
Well, thank you for having me, Joel. Regarding my last name, don't worry. Let's just stick to Thomas. Nobody can pronounce it anyway. The day has been quite interesting. I mean, yesterday we just opened a new role for Relay, a role that had quite a lot of interest. So we just opened a position for HR and especially for recruiting. And I thought, yeah, let's see, maybe a week or a few days, how many applications we get. I quickly noticed that within minutes, my mailbox started to be flooded, literally within minutes. In the first 7 hours, I had over 150 applications. And after 24 hours, I had to close the job on LinkedIn because I had over 300 applications already in. And not just anybody applying. I mean, 300 applications, most of which were highly relevant. People that are in the crypto space or that have very relevant HR experience. So going through most of them today was quite something.
I could actually think about this. I need to do a mental note to check in with you tomorrow if we should also keep the application open everywhere else, because we don't want to overload you with more work. And I just imagine your role is, generally speaking, quite differentiated between, the CFO stuff, so all of the financial stuff you need to have in place, all of the regulatory stuff you need to have in place, and then stuff like this one, which is more on an operational level. So you have to wear like many hats. How do you break it all up? And is there like a way in your head where you go like, okay, for the next 2 hours, I'm having the CFO hat on, for the next 4 hours, the COO hat, and after work, I'm putting on like my dad and husband hat? Because it's quite tricky to switch between all of these tasks.
Yeah, indeed. It reminds me of the movie The Lion King. When when the lion is saying to Simba, everything the light touches is your kingdom. Well, now I feel everything the light touches is within my job description. So indeed, between finance, operations, legal, compliance, HR, it feels like a lot. Luckily, I also inherited from a fantastic team. So I have people I can fully rely on, literally in every one of these categories. So we have a great operations manager, we have a fantastic compliance person, very experienced legal. We have several other people in compliance doing the KYC, onboarding for new users, and all of this is just working smoothly. Now, I am the only finance person, and I am kind of the only HR person. So that's why we are hiring for HR. That's one thing. And for the finance, that's definitely where I need to step in and make some moves. So to answer your question, I'm focusing on what is the most needed for the business. Currently, it was understanding properly the finance, the unit economics. So, how much does a user cost us to onboard in? How much does a user bring us on average? What kind of fees can we afford to offer to users? Because we want to offer the most attractive fees possible while still remaining, keeping a profitable long-term prospect and making sure that it just makes sense from a cash flow perspective, expected next funding rounds, and so on. So there is a fine balance to find, and that's exactly what I've been focusing on the last few weeks. And I'm glad that we are making very good steps forward with this. So first the finance hat on, and then just trying to be chief fire extinguisher for everything else. And as you mentioned, 2 young kids at home, they do not let me have a quiet time before work or after work, but luckily my wife is really stepping up and making this job possible for me. So without her, that would be absolutely impossible. But thanks to a good setup and people I can rely on, we make things happen.
Yeah, and I guess if people know you personally and get to meet you, I would say immediately get that impression that you're someone who has quite a lot of stuff figured out, and then on the other end is super competitive. We can get back into this in a short while. But I'm curious, as it's called Rabbit Hole Stories, how you found Bitcoin, because you have a very interesting path into now a Bitcoin company, but essentially also the ecosystem. Because in the eyes of like the typical social media Bitcoiner, you'd be one of the bad guys, like one of the suits, one of the bankers. How did you discover Bitcoin and why did you stick around?
All right. I hope I will completely change that image of one of the suits, one of the bad guys, and show that it's actually quite the opposite. So when I was studying economics, there was one class where there was one topic in particular that really fascinated me, and it was the topic of complementary currencies. So something rather in the shadow already at the time. So it was slowly coming out of the shadow. Not many people were talking about it, and it has not really picked up in mainstream literature or mainstream media, even though this is an absolutely fascinating and fascinating topic that has enormous merit. So it is the concept that if you have, instead of having a single currency for an economy, be it the US dollar for the US, or a euro for an economic zone, it does not need to be a country. You have something that is highly efficient. Indeed, all transactions are denominated in the same currency. They are all, it's easy to have flow of transactions. But at the same time, so while it has a high efficiency, it also has very low resilience, because when things get sour with this particular currency, when the economy goes down or there's anything happening with that, the impact on the entire ecosystem is enormous. Now, the alternative to that is to have multiple currencies working in parallel. And by the way, this is what the world has known for most of its history. You had gold, that was the main currency, especially for long distance trades. A merchant from Amsterdam could travel to Rome and use the same gold coin that has the exact same weight and the same shape, and trade from Amsterdam in Antwerp, in Rome, or in even further places without any trouble. There would be people accepting it, many. And for local exchanges, it was mostly silver that was typically of much lower value, and that enabled people to make trades with smaller denominations. And the silver coins were typically more local than the more established gold coins that were more global. So you had multiple currencies, and one was becoming, let's say, scarcer, or less used, or had any kind of trouble. You had the other one coming, so taking a bit. Let me say it differently. You had the other one becoming more attractive for other people and was being used more. And the fact that you had also every region, so small region within countries, they were using their local coins. You also had multiple types of currency you could trade with. So that enabled actually economies to stay a lot more stable. The fact of having multiple currencies enables you to smooth the ebbs and flows of economies, so that they are a lot more resilient to crises and to any types of shocks. Now, as coinage became more standardized and as globalization started, you had fewer and fewer currencies that were being used more and more, and the number of crises also increased significantly. The IMF famously publishes the number of banking crises, currency crises, sovereign debt crises over the world, and basically you have several. So in the world, you have more than one crisis happening per year, and this is a statistic over the last 50 years or so. which is enormous. And honestly, it's scandalous that we are in the, after the year 2000 and we still haven't figured out how to have, basic economics that are functioning.
So we're basically like the meme, where the guy's sitting at the chair, like everything is fine, and you just see the fire around. That's sort of how it's described best.
Yeah, precisely. And so I realized at the time, okay, there is something seriously wrong with our monetary system, because it is directly based in the monetary system, not even in the economics or the finance, really just the base layer, so monetary system. And I thought, okay, that's a topic that fascinates me. I want to know more about it. How do I do that? So I graduated from my 2 master's degrees in economics, and I decided to look into banking, because I thought that's probably the place where I will learn the best about money and how it's being used. I mean, if you want to change the system, first you need to understand it. Those who have no clue how the system functions and who are suggesting alternatives, you quickly notice the flaws in their thinking and just the lack of relevance of their arguments. So I need to understand that. I was lucky enough to get into a very good program at a top bank, ING, a program in which I had the chance to work in very many different departments, mostly in risk management and finance, and this in Austria, Frankfurt, and Amsterdam. And I learned quite a bit about it. So about money, about incentives, how people react to interest rates, to the monetary system overall. I still knew that there was something odd with this. It felt like there was a piece of the puzzle missing. I never could quite put my finger onto it, but I knew there was something weird with it. During my time at the bank, I also had the chance to become the local expert on blockchain technology. So I also have a background in computer science. So that made the logical move for me to also specialize in that. So gathering the economics and the computer science and learning about something new. At the time, I was interested in it, but didn't take it as seriously as I should have. Some people say, oh, I read the white paper and immediately understood that will change the world. Well, I read the white paper and then read it again and then read it again and just understood that I couldn't understand it properly. And then learned.
Yeah, and honestly, these people, I don't buy it. You don't read the white paper 10 years ago and you immediately get Bitcoin. That's a lie.
I mean, Andreas Antonopoulos can maybe say that, because he was a hardcore Bitcoiner from early.
But you also invested quite some time afterwards, because you realized oh, this can actually run on Python and I can test it, these things. So I think there is an interest, but it's not like someone reads the 8 or 9 pages and then they go yeah, I understood Bitcoin.
Well, that definitely wasn't me. And I even
me neither.
I even learned quite a bit about it and presented in front of the entire risk management board of ING Germany. And I remember telling them, I think it was 2014 or 2015, telling them, well, $400 something per Bitcoin is grossly overpriced. Well, and even though it makes us laugh today, obviously,
sure.
But you know what? Till today, I'm wondering, maybe I was right saying that, because the risk profile of Bitcoin at the time was not justifying this price. Possibly. It was such a remote bet on the future and the financial system, getting bad, getting even worse than it was, that it was probably a stretch to even consider it seriously at the time.
Yeah.
I wish I had bought it, and no, I did my homework, I learned about it, and maybe I was too much into the traditional financial system to realize how life-changing this thing is, how it will change the entire world. In one
to
sense,
be fair, if you work in banking or the traditional finance system, you also don't come across an asset where you go like, oh, this can impact us on so many levels. It's usually, does it fit the risk profile we're seeking for? Like, does it have some, I'm not going to call it applications, but like, does it have some use cases in the real world? Or like, is the business solid? Like, these are sort of the main things you have. And maybe you go down the, gold route, or like these kind of things where you go a bit deeper and you understand like, okay, there's more to that story. But it's very rarely like, this can, in the next 10 years, change the world for the better. It's always this like, does it fit our bills? Yes or no? And then you sort of go on. So it's not really something you're used to in that moment.
Yeah. No, precisely. When you study finance, you have some models behind you. You have plenty of things that are very useful that gives you a structure, and then you have this thing that just does not fit the structure. You need to take everything you learn, the entire structure, get rid of it, and then be open-minded enough to actually look into it and realize, oh, actually that makes complete sense on a whole different level. A level so different that you do not even consider it. One way of presenting that is to say one way of presenting it is when people ask you, okay, what is your exit strategy of buying Bitcoin? I'm like, no, you don't get it. By asking that question, you just don't get it. Buying Bitcoin is the exit strategy. And they're like, no, but when will you sell? At what point? Like, no, you do not sell. That's the point. You sell fiat. The getting into Bitcoin is the exit strategy. And I remember when I got my head around that concept, that was really, your perspective completely shifts, and that was really quite a moment for me to in my rabbit hole story.
Was there anyone in your Bitcoin journey that had like a huge impact where you went, now I get it because of this person or that book or that YouTube video I watched?
Yes, there was. I will get to there.
Mm-hmm.
So let me continue.
Okay, sorry.
In chronological order, but I will get to there. So after my time at the bank, I decided to continue adding letters after my name. As you know, I have already more letters than
for the audience. The joke between Thomas and me is, if he continues making more diplomas, he has to have a second line on LinkedIn just for his last name, or just for the letters with his weird stuff.
Anyway, so I decided to go for an MBA program that brought me to INSEAD in Singapore. Spend some time there, strengthen the basics on everything you would know on business administration. Learn to know plenty of great people, and realize that after that I was not any smarter than before that, and I still needed to learn everything from scratch. So for a completely different reason, I decided to try a different industry than financial services. So I moved into healthcare for a while, still working in finance function. In particular, I was the country head of finance of GSK Austria for the last 4.5 years, where, even though healthcare was definitely not my thing, I did learn plenty on, how to lead a company, how to manage a full P&L from A to Z, really. So everything from budgeting, forecasting, closing, the audits, pricing, just name it, everything related to finance. I was the one guy for all of Austria for that company, and I did learn quite a bit there. Also in leading people remote, I was fortunate enough to have people in multiple countries from whom I also learned quite a bit. And during this time, knowing that healthcare was probably only a phase that I needed to leave behind me at some point, I decided to reopen books on topics that were of interest to me. So when my son was born, I decided, hey, this Bitcoin thing I was into, when was it, 7 years ago? Let's look what it became. I'm really interested to know what, whether I was right or wrong. And there I quickly realized how Bitcoin had completely changed. I mean, it used to be an extremely risky asset with remote potential that could be destroyed by any willing government or by any major corporations. And then 2021, it was a completely different species. I mean, you could not possibly compare Bitcoin of 2021 with Bitcoin even 2018, which is again not comparable to Bitcoin 2014, which again was completely different to Bitcoin 2011, let alone the story before 2011. And I realized, well, the potential of Bitcoin probably increased hundredfolds and the risk decreased by, I don't know, 99% or something compared to what it was. And I realized we were still insanely early. So barely anybody in the world knew about the potential of Bitcoin. I mean, percentage of population, it's ridiculously few people who understand Bitcoin. And yeah, I got one book, and then another one, and then a third one, and then quickly realized I just couldn't get enough of it. Ordered every Bitcoin book I could find online. I mean, Bitcoin, blockchain, crypto assets, just trying to understand this space as best as I could. And I remember spending the nights. So during the night feedings, so my son was born in 2021, and he was waking up often in the night. And I had 3-4 night feedings every night, so 1 full hour trying to give him a bottle, trying to put him back to sleep. That took really forever. And if you do that in the dark, obviously you cannot make any noise, so you cannot read a book, you cannot listen to music or anything. So I just decided to put my headphones on, noise cancelling headphones, put a podcast on Bitcoin, and you can imagine 4 hours of podcast a night for many months. Well, you quickly exhaust a lot of podcast material. And I basically listened to everything I could on the Bitcoin topic, and realized, yeah, I really need to make my job out of that, to spend my entire energy and free time into this topic. So I made notes after every podcast, after every book, or during every book. And at some point, I decided to structure my notes in the form of a book. So using my background that I had in financial risk management, in valuations, my background also with complementary currencies and other topics that I thought I could add to the existing literature on Bitcoin. And yeah, after a while, I thought, yeah, let's go for it. Let's try to write a book on the topic. 2 years later, or let's say 1.5 years later, my book, so a draft of the book was in front of the board of editors of Springer, so the big publishing house, and they approved the publishing of the book. So I finished it, and the book was finally published under the title Understanding Crypto Fundamentals in June last year. So before all the Bitcoiners freak out because there is the word crypto in the title of the book, the original idea was really to get people interested into Bitcoin. And if you ask a random Joe in the street whether he's interested into Bitcoin or into crypto, I think a lot more people will be interested into crypto. So my point is, look, here is what crypto assets are. Here is why some crypto asset can have value. Well, hashtag Bitcoin. And here is why other crypto assets are basically unregistered securities that A, should be illegal, B, are highly unethical, and C, are probably going to make you lose a lot of money if you try to come anywhere close to that. So after I got the approval from Springer, I thought of changing the title to something more Bitcoin-like, but that's not exactly how it works with big publishing houses. So we went with that title. The book got very decent, was very decently received. So I have a best-selling author in crypto assets, in Bitcoin, in blockchain technology who have given exceptionally good editorial review for the book. I have, I think, very good ratings online, and I've received very good feedback on it. So really glad with what it became. And after the book was published, I decided to it was probably the time for me to make the next move and make it my full-time job. So literally spend 8 hours a day or more working for Bitcoin somehow. And when I got the chance to be introduced to the CEO of Relai just after the CFO position was open, everything changed, and quickly thereafter I could join Relai in this role that I'm absolutely loving currently. So I've been there for 6.5 weeks or so. It feels like 6 years. That's the pace in startups, but in a good sense. It's just that the quantity of stuff that we are getting done is.
Welcome to startup life.
It's the pace at which it's happening is madness. Just to give a comparison, in my previous job, I went to hire somebody in my team. It took us 8 months to get the job approved that we could open the position. Yeah, just that. Not let alone creating the job description, starting the process, the interviews, blah blah blah. So all in all, like about a year. A few weeks ago, Julian, the CEO, tells me, "Hey, actually, our users are waiting a bit too long to get their KYC process approved because we had a big wave of people trying to get KYC, so joining the platform." And Julian was like, "Okay, you should hire another KYC person in your team." I'm like, "Yeah, I completely agree." So next day I had the KYC job online. The day after I had interviews with the top 6 candidates. The day after we had selected the candidate. And a couple of days later, the guy was with me in Zurich with his laptop working and starting to work. All in all, it took exactly 1 week. So from deciding to have the job to the guy, fantastic person, by the way, starting the job, all in all 1 week. So just a completely different pace that I have to say I really enjoy.
With such a vast difference from what you're used to coming from the risk assessment, risk management world, banking world, finance world into Bitcoin now. And what we often hear is stuff like the stock to flow model, or just generally speaking, the power law, whatever it is, whatever's hot right now on Bitcoin X. Is it even possible to model Bitcoin in a way that we're used to creating models around traditional assets? Or is it something where you have to say, yes, you can create a model, and we should take a look and compare between the different things, but it's such a different beast compared to what we usually know. We really have to first get to know the fundamentals and then build from there. So can you even do this? Or what is your approach there if you have to explain someone from the finance world, like, oh yeah, you can use model XYZ, and then you understand Bitcoin?
All right. So that's a topic that comes very close to my heart because that was the main question I was asking myself when I wrote the book. Basically, I was trying, the book is my own research, trying to answer the question, how do you value this thing? Basically, I want to know, do I buy or do I sell? To answer that, I need to know whether the fundamental value is higher than the current trading price. So to measure fundamental value, you need models or something to model it. So of course, first thing first, you look at traditional ways of modeling any asset. The first answer that any traditional finance person would tell you is, okay, either you use multiples or you use cash flow analysis, so net present value of future cash flows. So let's start with multiples. In order to use that, you need to see what similar assets exist and how they are valued and then you can draw parallels and value the asset that you're trying to get your head around. And I remember my finance teacher from INSEAD telling me always, remember Sinéad O'Connor. I mean, that's a different generation than ours. But he had one famous song. It was Nothing Compares to You. And when you're using comparables, well, nothing compares to you. And that's precisely this. So for Bitcoin, you don't have anything to compare to. So anybody willing to use multiples, well, remember Sinéad O'Connor. The closest thing you could imagine is indeed gold, but it is a flawed comparison in many respects. I mean, gold is still an asset whose supply is increasing every year. Gold is an asset that you cannot send it from Sydney to New York on a Sunday afternoon from your couch at basically no fee. There are plenty of reasons why gold is not an appropriate comparator. Nevertheless, it still comes a lot closer as a comparison to Bitcoin than any currency. That's why the word cryptocurrency is actually a terrible nomer. It should be crypto asset. Because so other currencies are by definition centralized, held typically in the hands of a government or central bank, which, for all practical matters, is basically the same, since one depends on the other and is heavily influenceable by the other. While Bitcoin, similar to gold, is a commodity, an asset without an issuer. It's an asset that you cannot have. You do not have an issuer. You do not have one central person that can significantly influence the price of it in any direction, because it's fairly well spread over the world, and the creation of new units of it is not centralized but fairly well spread again over the world. So that's why Bitcoin could be compared to gold in one respect. And that drives one of the possible valuation methods. So you compare it to gold. Gold has a market cap. I mean, now it must be around 13 trillion US dollars, something like that, 13, 14 trillions. Bitcoin has a market cap of about 1 trillion. However, Bitcoin is largely superior to gold in basically any metric that is meaningful, with one exception. Gold has a very established historical and religious context in some cultures, including India and China. And that's why this you will never replace. So this value of gold, we will leave it to gold. That's clearly Bitcoin will not take that. However, the vast majority of the value of gold is held for so as a hedge against monetary debasement, as an asset that is difficult to confiscate, and an asset that will be valued by many people, and that is difficult to trace. If you have a gold coin and you want to exchange it to somebody else who wants a gold coin on the other side of the country, you will probably find somebody to buy you that and exchange real goods and services for that. So there are, in that respect, there are comparisons. Taking one step back, gold is currently has a market value that is much higher than that of Bitcoin, which is nonsense. Bitcoin should be valued at least, at the very least, at the amount of where gold is, and in my opinion, probably closer to 10x what gold's value should be. So bringing Bitcoin to an asset that is undervalued by roughly 100x factor from that perspective.
Before everyone writes it, no financial advice. That was just Thomas's opinion.
Thank you. As I know, especially in the US, that's always important to flag. This is not financial advice. This show is purely for educational purposes. Make your own research. I'm not a financial advisor. All right. That was one traditional method, multipliers. Now, the other traditional method would be net present value of future cash flows. Well, good luck with that. Bitcoin does not have cash flows. Yeah, if it would be the same if you're trying to value the US dollars based on the future cash flows of US dollars. Well, there are none. That is just not the right approach. You could not possibly do that. This is so net present value of future cash flows is a method used for a bond for a company where you can indeed extract value over time, and it would have a terminal value and so on. It does not work for a currency that is used to price the value itself. Coming back to what I was saying, Bitcoin is the exit strategy. It is the money. It's not, it's meaningless to express Bitcoin in US dollar. You should express Bitcoin in Bitcoin, not the other way around. But then I realized that's still not very useful in order to value Bitcoin, to have, one model that is only, that is flawed at best, another model that is completely unusable. So I looked for everything else existing. And in the model, I present maybe 10 in the book, I present 10 different valuation models. One of my favorites is probably the stock to flow. Again, I'm the first one to flag the limitation of the stock to flow model. But at the very least, it establishes a relationship between the scarcity of an asset and the value of the asset. This stock to flow model has been used in the past for scarce natural resources. Gold is one of them. It has proved valuable for these resources, for these commodities, and it has proved that for Bitcoin, it had an extremely good fitness, so goodness of fit. So let me explain that. When Plan B, which is a nickname for a Dutch institutional investor who published the model for the first time, it was in March 2019, if I'm not mistaken. He predicted that Bitcoin price would skyrocket from about $9,000 at the time to roughly $50,000 once the third halving of the supply would be priced in. And people were calling him crazy at the time. How can you possibly think that Bitcoin would increase by a factor of 5 or more within a year or so? And then, almost like clockwork, the third halving took place, and the price of Bitcoin followed perfectly the stock to flow model that the Plan B had established for it. Then people started to take him a lot more seriously. Then, it even shot higher than what the stock to flow predicted. Then, as a result, it dropped a bit below that. Then the year 2021 and 2022 happened with many failures in the crypto asset space in general, the 3 Arrow Capital, the FTX in particular, which created an enormous wave of negative headlines on Bitcoin. Just FTX, they sold all the Bitcoins of the users to try to pump their fake token, FTT. And that caused the price of Bitcoin to drop to a record low. And funny enough, when it hit literally the lowest point in November 2022, that's the day when I signed the deal with Springer Nature to write a Bitcoin book. So I literally at the worst moment of the bear market. But then Bitcoin price recovered, and we had just the fourth halving that happened, and the price of Bitcoin is exactly where the stock to flow had predicted that it would be before the halving. So the halving, as per that model, is not yet priced in, and I think indeed it's not priced in at all. And just to continue on what I was saying before, on valuation, well, that model predicts that once the fourth halving is priced in, so let's say in the coming 18 months or so, we should see the price of Bitcoin stabilizing I will take a large spread somewhere between, let's say, $200,000 and $800,000 per Bitcoin, depending on what history you take for in order to establish your stock to flow model, and depending on how strict you are on the parameters of the model. So also a useful model that could be, criticized in the sense that the stock to flow is an extremely simplistic model. It only takes time, past prices, and scarcity into consideration. That's it. So the stock to flow ratio. It does not take into consideration regulations or technological improvements or the state of the economy or anything else. So it's a model with extremely few parameters, and therefore you will logically reach limitation with that model. And even Plan B, the author is the first one to say, look, the model will not work forever. There is some point it will decouple, and because the model is basically predicting things that are Bitcoin price to infinity, and once the stock to flow ratio is 0, literally the price should be infinity, which some Bitcoiners will say, well, it will happen. Well, I have a more conservative perspective on that, and I do think that it will decouple at some point. My personal belief is that we are not there yet. We still have at least one halving to go before that happens.
So TLDR, Bitcoin is its own beast. There are models that fit to a certain extent, but it's probably best to reevaluate all the time and go based on what's currently happening or what's currently changing.
Yeah, precisely. Then you have other models that will validate these statements. The stock to flow cross asset model. So if you take the price and the valuation of gold and silver and add that to the model to compare the scarcity of the asset compared to the valuation of the asset, well, you notice that Bitcoin and silver and gold fit perfectly on the straight line axis with that model. So there are many reasons to believe that this model is not just spurious correlation. There is a very strong pattern, and there's a very strong economic logic behind it that explains why it does make sense. And then you can go even further with other models on liquidity, global liquidity, or the level of risk on sovereign debt. The Fulcrum Index from Greg Foss measures that, and indeed Bitcoin tends to follow. So the more risky sovereign debt is, the more valuable is Bitcoin. And there is a logic behind it as well. If the more likely it is that the US will default on its debt, the more likely it is that Bitcoin will come in as a replacement for the US dollar. At the very least as a store of value, and possibly also as a unit of exchange, or even possibly as a unit of account. And therefore, there is a logic that would explain why that would make sense. And there's not a single model that will give you the valuation for Bitcoin. But here in the book, I'm presenting 10 different models, and they will give you a direction for the future of price of Bitcoin. And I much prefer being directionally right than being accurately wrong. There are people saying, oh, the price of Bitcoin should be 67,623 or whatever. And I'm telling you, look, I don't care the exact value as long as I'm in the right order of magnitude, which is an enormous spread, but it is already difficult to predict the order of magnitude. And what I can see from here is the market price of Bitcoin is currently at least one order of magnitude below what its fundamental value should be. And that's also why I believe so strongly in Bitcoin, and why I feel like I'm really doing something for the world, where when I'm working at my current job, putting Bitcoin is in as many pockets as possible, and letting people know about this enormous change through which we are going.
Wow, Thomas, I think if we would continue talking about the different aspects to this, it would be like a 4-hour podcast. But I want to be a bit cautious of time because I know the kids are probably waiting in the next room because it's playing time soon. As you know, with Rabbit Hole Stories, we always want to prove, because we've established you went quite into detail how you got into Bitcoin and the difficulties of actually evaluating it, and why it's such a struggle for most people to then probably also explain it to folks. But I think there is a saying, all roads lead back to Bitcoin, that we can somehow prove very simply that it's actually quite easy to link everything back to Bitcoin. And to prove this, I'm going to give you a word or a phrase, and you can have some time to think. If nothing comes up, you could always say, like, you could buy this with Bitcoin or something, because that's technically the cheat code. But we want to test it today. And I thought, with you being from Belgium, it would be fun to see how Godiva chocolate or the Godiva brand can be linked back to Bitcoin.
Oh, wow. So I was expecting a lot of different questions, but
I had a different question in mind, but it wouldn't be PG friendly.
All right. Well, multiple ways. Chocolate is something that provides you pleasure. Well, keeping your money will provide you pleasure. Secondly, chocolate, if you want to buy it, well, you need to buy it in something that is valuable, and the most valuable asset in the world is Bitcoin. So that's probably the toughest question I've ever been asked, and I think I will leave my answer to that for better or worse.
That's a good answer. Like, I wouldn't have thought that for. I would have gone way more complicated down the road. Like, yeah, well, it also has something to do with pleasure and like enjoying yourself and thinking about good times. And then I would have made that link. But yeah, I like that answer. That's a good one. Thomas, before we head off, if people got questions, if they want to find out more about the book, where can they find you, and where is the best place to actually get in contact with you?
You will find me on LinkedIn, X, and Nostr. So LinkedIn and X, just type my name, Thomas Jeegers, ThomasJeegers. And on Nostr, just type my name, you will find me on Nostr as well.
And I will also link the accounts below, so don't worry about that.
Fantastic. And the book is available on all major bookstores online. Literally 100 plus online bookstores.
Wow.
The title is Understanding Crypto Fundamentals. It was published last year. I do hope there are still many things that are useful and that are adding to the existing Bitcoin literature on the topic. And of course, I'm always looking for feedback. So please feel free to write me. Always a pleasure to hear from readers and followers.
Perfect. We'll make sure to have everything linked below. Thomas, the most scarce asset in the world besides Bitcoin is probably time. So we'll leave it at that for this episode. I'm sure you'll be back in the future in some way, shape, or form. Thanks for coming on. And as always, also thanks to our lovely listeners. And you know the drill. Stay curious.